Hi, my name is Nick Brightbill. I'm one of the partners here at Hershey Financial Advisers, and I want to talk to you about a simple topic today, but yet profound: qualified charitable distributions. So many of you have places in organizations in your heart and mind that are very special to you, either because they've impacted you personally, continue to impact you, through your day-to-day life, or you've seen the impact that it's had on others. It tugs at your heart, and that's where you want some of your hard-earned money to go. Well, as you age and hopefully you've put money away into a qualified retirement plan. For most of you, that's probably the case if you were working full time for a string of years, or even if you were self-employed, you had the opportunity to put money into a qualified retirement plan. Could be a 401k, 403b, 457 plan, and there are other plans that are qualified plans as well. But the money that you put in there, as you remember, goes in pre-tax, right? You get to deduct that level of contribution off of your taxable income. And that money hopefully is invested well and it grows over time. And then once you reach retirement age, north of 59 and a half, you get to start withdrawing that money at the level you want to withdraw. That makes sense for you. And you get to use that money, which is great. Once you get to the age of 70 and a half, you have the ability to take those withdrawals and have them go directly to the 501c3 nonprofit charity of your choice. So the way that works, you've got your IRA, right? You're at age 70 and a half. And let me say this: if you get to 73 when required minimum distribution age is, and you and your spouse are givers and you haven't taken advantage of the qualified charitable distribution yet, you want to start doing it when you get to RMD age, because now you're required to pull money out anyways. And your qualified charitable distribution can be used to meet your required minimum distribution, right? It's money exiting the account. It's just a matter of where it goes. So at 70 and a half, you can start withdrawing this money out. So let's just say, for example, you give $12,000 a year to the local rescue mission, okay? Passionate, near and dear to your heart. You love giving money to it. You love volunteering there. And this is something that you continue to do. Well, you're now 70 and a half years old and you have a qualified retirement plan from when you were working full time. You can take the $12,000 a year that you were going to just take out of your savings or out of your checking or personal income, and you can take it out of the IRA, have it bypass you completely and go right to the rescue mission that will be able to help the people there in need. And it goes there, and this is awesome, with zero taxes. Zero taxes. The IRS does not get their pound of flesh on that money. So this is important to think about. And it's important to realize once you're already there in life, but it's also important to think about when you're younger. If you already have this habit of giving, believing that everything that you have is not really yours, but it's yours to steward over, you want to start thinking about this earlier on, because there's definitely advantages to doing after-tax retirement programs, the most popular being a Roth IRA, and knowing that you don't have to pay any taxes in the future. But for many of you, your income's going to be here while you're working, and it's going to be lower in retirement, likely in a lower tax bracket. So taking the deduction, if you're at a higher level of earned income, right, especially if you start getting into the top 10, 5% of earners, you definitely need to contemplate whether paying the taxes now and putting it into a Roth IRA is actually going to best benefit you long-term. Because if you're a giver, this money goes from your pre-tax qualified retirement plan. Again, it goes around you completely and goes right to the 501c3, goes right to the thing that you're the mission or nonprofit that you're passionate about. And there's no taxes paid anywhere along that line, right? The money that goes directly there goes around you. You still have to report it on your tax return, but it doesn't count in your taxable income. And then you're able to use that money to simply give to something that's going to provide benefit and value beyond your years of living. So you want to make sure you connect with your financial advisor office and your service team to know how to properly withdraw that money. You can't just take it out, receive it in your checking account, and then give it. That doesn't work. You actually physically can't receive it. It's got to go from the qualified retirement plan right to the institution, the 501c3, in order for it to count technically as a qualified charitable distribution. The platform you're working on has, or where your money is custodied, has proper forms and things to fill out. And again, you want to connect with the platform, with your service team and advisor to make sure that you are doing this the right way in order to get the greatest impact to those in that mission or charity that you're passionate about, and then ultimately to not pay any of the tax typically owed to the IRS as it goes into that 501c3 tax-free. Wow, what an incredible benefit. I hope you take advantage of this if you're not doing so already. Again, you've got to be 70 and a half in order to do a qualified charitable distribution. And let me say this, if you're in your 40s or 50s or even 60s and still working full-time, and you've been doing Roth, I would highly consider doing pre-tax because you're going to get the benefit now. And if some of that money is going to get given away in the future anyways, your qualified retirement plan is a great place to distribute from in a tax-efficient way. Thanks so much for watching today. If you like this video, please click the like button below and subscribe to our channel. There's going to be more information and things like this that are going to help you along your financial journey. Thanks so much for watching. Look forward to talking to you again soon.